Hey there, Crypto Degens. It's your favorite digital finance enthusiast, Crypto B, coming at you with another highly requested deep dive. Today, we're tackling a topic that's got the crypto community buzzing: Bitcoin's fear gauge peaks. This one's a roller coaster, so strap in as we decode the mysteries of Bitcoin's mood swings. First off, a big shout out to our eagle eyed viewers who spotted this trend and dropped it in our comments. You ask, and you shall receive. Now, let's unpack the enigma that is the fear gauge in the Bitcoin universe. Ever heard of it? If not, you're in for a treat, because understanding this metric is like having a crystal ball in the volatile world of crypto trading. So, what exactly is this fear gauge we speak of? It's more formally known as the Fear and Greed Index. But why is it so crucial, you ask? Well, it's the heartbeat of the market, giving us insight into whether investors are feeling fearful or greedy at any given moment. A brief history lesson reveals that Bitcoin's price fluctuations often dance to the tune of fear and greed, making this index a valuable tool for navigating the crypto seas. Diving deeper, the Fear and Greed Index is calculated through a mix of volatility, market momentum and volume, social media chatter, surveys, and dominance. It's like a complex crypto cocktail that, once sipped, reveals the market's hidden sentiments. Recently, we've seen this gauge hit peaks that would give even seasoned traders vertigo. But what's driving these dramatic shifts? It boils down to market dynamics, news, and the psychological play between fear and greed. Understanding this interplay is crucial because it dictates market movement. Extreme fear often signals a buying opportunity, while extreme greed might suggest a market correction is on the horizon. But here's where it gets spicy: deciphering the complex algorithms and data that feed into the Fear and Greed Index. Imagine combining metrics from various sources and crunching them into a single digestible number. That's what this index does, giving traders a snapshot of market sentiment. Now, to answer some burning questions, what's behind the recent peak in Bitcoin's fear gauge? Market uncertainty, regulatory news, or a sudden price drop can all send the gauge soaring. How can savvy traders use this to their advantage? By reading between the lines and understanding that extreme sentiment often precedes a shift in market direction. But beware, my fellow crypto enthusiasts. Misinterpreting the Fear and Greed Index can lead you down a risky path. It's a tool, not a crystal ball. Always combine it with other analysis methods and never invest based on fear or greed alone. Let's look at some real-world magic. Remember the market turmoil last year? Some traders used the fear gauge to snap up Bitcoin at bargain prices right before it rebounded. That's the power of understanding market sentiment. So, how can you incorporate the Fear and Greed Index into your trading strategy? Start by observing its movements over time. Notice any patterns? Use these insights to temper your investment decisions, always with an eye on broader market trends. Wrapping up, the key takeaway here is that Bitcoin's fear gauge is more than just a number. It's a window into the market's soul, offering clues about future movements. Intrigued? Pumped to apply this knowledge to your crypto adventures? If you loved diving into the depths of Bitcoin's fear gauge with me, don't forget to drop your questions or suggest the next big topic in the comments below. Remember, we're here to demystify the crypto world together, one deep dive at a time. Catch you in the next wave, Crypto Degens. Stay smart, stay savvy, and most importantly, stay curious.